Welcome back to the Web3 Daily. Today's market feels like water slowly warming up, not boiling hot with hype, but the temperature is clearly rising. Bitcoin has climbed back to around 117k, up about 2%, holding that support level steady. Ethereum was more aggressive, breaking through the 3,900 mark with a gain of over 6%, and you can clearly see the short-term buying pressure. The majors outside of BTC and ETH are also showing strength. Ripple printed a strong green candle, up about 10%, and Stellar followed suit, with both on-chain activity and social buzz picking up. Overall, this isn't your classic retail FOMO run. It's more about institutional flows and policy-driven sentiment. Things like the US pension reform and talks of staking for ETFs are the kind of signals that quietly nudge risk appetite higher. The vibe is definitely positive, but even with the uptrend intact, short-term volatility is still a given. At these levels, a single macro headline can flip sentiment quickly. Whether you're short-term trading or positioning long-term, it's worth keeping some room to maneuver. The market always has its own mood. Today's hot topic is straight out of a drama script. TikTok suddenly got pulled into a Trump coin controversy. A US congressman claimed that TikTok's Chinese parent company had spent $300 million buying Trump's Trump token. That comment set off a wave of discussion almost instantly, especially on X and YouTube. But TikTok quickly responded, flat out denying it. Media later uncovered that the actual buyer was a smaller company called GD Culture Group, which has some TikTok-related content business, but isn't the parent company. Because it has Chinese ties, and the token in question is Trump-branded, the rumor got framed as if TikTok was behind it. My first thought was, this is what happens when crypto and politics collide one small spark, and the whole internet catches fire. Trump coin has always been controversial, and any buy with a politically sensitive backstory is easy to spin. In Chinese crypto circles, people joked TikTok just went viral by catching a stray bullet, while others pointed out how crypto has become an amplifier for public narratives. If you get pulled in, you'd better respond fast, or the momentum will run away from you. The first piece of news is that President Trump signed an executive order allowing US 401k retirement plans to invest in cryptocurrencies, private equity, real estate, and other alternative assets. This effectively links a $12.5 trillion retirement fund pool directly to the crypto market. Under the order, the Department of Labor and the SEC will revise rules to put digital assets in the same category as stocks and real estate, letting investors choose whether to allocate. Back in May, the Labor Department had already rolled back earlier restrictions on crypto in 401ks. Now, this move feels like a full-scale green light, with Trump also signing another order to prevent banks from debanking crypto firms. My initial reaction, this is almost a pure upside for the market. Pension funds are massive and long-term. Even 1% flowing into crypto would be huge. More importantly, it's another step forward for crypto's legitimacy in the US. Along with recent stablecoin laws and talk of a national Bitcoin reserve, you can feel the regulatory tone warming fast. The market responded right away, with Bitcoin holding its rebound and Ethereum plus other majors gaining confidence. But while this type of policy tailwind supports the midterm trend, short-term volatility is still very much in play, especially since the actual capital inflow will take time. The second news item is that the long-running Ripple case has finally closed. This week, the SEC and Ripple jointly filed to withdraw their appeals of last year's ruling, each covering their own legal costs. That means the question of whether XRP is a security is officially settled. This battle has been running since late 2020. Last year, a federal court ruled XRP sales on secondary markets didn't constitute securities transactions, which was a win for Ripple. The SEC appealed. Ripple countered. But after Trump took office and replaced SEC leadership, the tone softened. By June, both sides accepted the original ruling, with Ripple paying a $125 million fine. The takeaway, Ripple's overhang is gone, with XRP jumping over 5% to around 3.2. At an industry level, it signals that US regulators are willing to ease off aggressive stances and work toward handshake resolutions. That's a boost for confidence in other projects too, especially given how past lawsuits got XRP delisted from exchanges. Third up, the New York Department of Financial Services fined stablecoin issuer Paxos $26.5 million and ordered them to invest another $22 million in upgrading AML and compliance systems. The issues date back to their partnership with Binance on BUSD, where regulators found serious gaps in AML monitoring, KYC procedures, and due diligence. Back in February last year, NYDFS had already halted new BUSD issuance, signaling compliance concerns. The SEC also issued and later withdrew a Wells notice. This fine is basically a public airing of past lapses. The message is clear. Even licensed issuers must keep AML and the customer vetting airtight, especially when partners carry risk. The fine won't hit Paxos' current business hard since BUSD is already off the main stage, but it shows regulators will keep the pressure on stablecoins, particularly cross-platform collaborations. Fourth, the Chicago Board Options Exchange has filed to allow VanEck Spot Ethereum ETF to stake holdings through a third-party validator, earning rewards to be included in returns, if approved. ETF investors wouldn't just track ETH's price, they'd also get staking rewards. This bridges Ethereum's post-yield model with traditional finance. The US. ETH Spot ETFs only launched at the end of July, pulling in over 1B in first-day trades, but none can currently stake. CBOE is trying to be first. If it passes, the ETF becomes more attractive and could bring more institutional funds into Ethereum staking, strengthening network security. But the SEC will have to be comfortable with custody, liquidity, and distribution risks. Even if it's not approved, the direction is clear. Institutions are looking beyond the price swings to on-chain yield. The fifth story is that Nasdaq-listed CEA Industries raised $500 million all for BNB and even changed its name to BNB Network Company. The stock jumped sevenfold in one day, and BNB hit an all-time high of 860. Within days, companies like Liminatus Pharma, Windtree Therapeutics, and Nanolabs also disclosed multi-$100 million BNB buys for their corporate treasuries. It's reminiscent of MicroStrategy's Bitcoin play, but this time the bet is concentrated on Binance Chain. Many of these companies are crypto native, suggesting both strategic positioning and PR value in aligning with Binance. The risk is concentration. A downturn would hit balance sheets hard, but the broader takeaway is that BNB is joining BTC and ETH as a corporate reserve asset. Finally, SharpLink Gaming announced a $200 million private placement to buy ETH, bringing its holdings to over 520 ETH, worth about 2B. That makes it one of the largest corporate ETH holders. These holdings will be staked for yield, making accumulate and stake ETH a core strategy. This is basically the Ethereum version of MicroStrategy, but with staking yields added. It shows institutions see ETH as a productive asset, not just a price bet. That cash flow makes the case more compelling, though the position size means volatility will show up in earnings. ETH's role in portfolios is shifting. It's no longer just Bitcoin's number 2, but has its own narrative and yield model.
That wraps up today's market, topic, and news. Sentiments warm with the institutional moves, policy shifts, and rapid-fire topics, from the TikTok Trump coin rumor to the US
401k green light, the Ripple case resolution, the Paxos fine, the ETH ETF staking proposal, and massive corporate buys of BNB and ETH. We've touched on funding, regulation, and tech. Short-term swings will happen, but the bullish big-picture stories are stacking up. Now it's a matter of whether these signals turn into real capital flows and on-chain activity. The market will answer in its own way.